Still focusing on the upcoming growth figures to be released by Statistics South Africa later today. Analysts have expressed mixed expectations given the current economic climate. Data on the second quarter gross domestic product comes following a series of load-shedding bouts, which has affected key industries that drive economic growth, including mining and manufacturing. However, the first and fourth quarters had been seeing marginal improvements, and the question now is, will the second quarter GDP figure reflect a similar trend? Chief Economist at Don Consulting Group, Chifipa Mhango, joins us now to expand on this conversation. Chief, thank you so much for your time. It is expected and surveyed analysts by Bloomberg forecasting a 0.8% shrink in the Q2 GDP figures. What is the market expecting?
Well, thank you very much for having us, and good morning to your listeners, as well to yourself, to Misani. Well, I think the expectations are quite coming in on a much more depressing side, in the sense that we're expecting a kind of a shrinking in terms of the numbers with regard to the trend, mainly driven by what has been happening in the second quarter of this year. If you realize that, I think you just mentioned about the load shedding, which was quite aggressive in the second quarter of this year, but also the floods in Devon were quite disruptive especially in the manufacturing sector, as well as in terms of exports trends with regard to the port disruptions. So I think those kind of situations are really indicating that the figures which are coming out today will not be really welcome news for the economy.
What would that mean for the current economic climate in South Africa? We've got rising interest rates, the cost of living skyrocketing. What exactly, or where exactly would an increase or a drop in GDP mean? Chifipa, I'm asking what exactly a drop in GDP would mean for the current South African climate, especially with a consumer under pressure.
Well, I didn't hear your question very clear, but I think if you can talk about from the consumer pressure, which is the last part I heard on your conversation, is that the consumer is not only pressed in terms of rocketing cost of living, but I think if you look at from the overall picture of the economy, high unemployment rate, which is still about 30%, it's quite depressing news for anyone who is really trying to participate in the economy. If you look at the key sectors where we are really suffering in terms of these kind of trends, it's actually in the mining and manufacturing sector. For instance, just looking at the picture in the second quarter, we have not had any positive production growth rates in regard to the mining and manufacturing sector. In fact, since April, both the mining and manufacturing sector, which are the key sectors when it comes to the GDP contribution towards the economy, have actually been on the decline. So it's really a depressing environment from the second quarter with what has been transpiring in the South African economy.
Should GDP drop this time around, what then is the outlook for the remainder of 2022?
Well, we're not seeing much signs of improvement in terms of what we've been seeing as regard to the trend. The key indicators we'll be looking at in the economy, we'll look at the business confidence levels, which relatively wise is still on the low side, obviously driven by the environment around load shedding. But also, if you look at the picture in terms of mining and manufacturing production trends, we still listen to the latest figures, which came out for reflecting the second quarter, which is June, is still on the negative side. In fact, even much more worsening. So unless the picture improves in the transpiring third quarter numbers, then maybe something miraculous can happen. But otherwise, I think from the picture-wise, it's really a depressing view in terms of what we're seeing in the economy. We must remember that the war in Ukraine is still disruptive in terms of the emerging trends with regard to production patterns in the global economy. If you're looking at the energy cost aspect point of view, it's actually still disruptive in terms of the cost patterns in terms of the industrial landscape. So as long as the cost aspects on the industrial point is actually still rising, it actually limits the capacity to expand in the manufacturing sector, as well as the capacity to expand in the mining sector. Those are the key areas where I think the concern is actually coming out very strongly.
We leave it there in our GDP preview, this time around talking to economist at Don Consulting Group, Chifipa Mhango. That's it from the business desk.